Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's Tuesday, the 21st of February, and we have Jessica Amir, market strategist at Saxo Capital Markets, as our guest today. Jess, it's always great to have you on the show.
Always great to see you.
Now, Jess, before we get your insights, we're going to take a look and see how markets across the region have performed, and we'll also take a look at crypto markets. Bitcoin starts off at 24,914, just nudging the 25,000 mark. It's up 1.78%. Ethereum is at 1,698. It's up 0.55%. Now, looking across the regional stock markets, the SGX is down 0.1%. Bursa Malaysia is up 0.14%. Shanghai is up 0.09%. The ASX All Ordinaries is down 0.06%. The Nikkei is down 0.19%. The Hang Seng is down 1.05%. And rounding up the numbers, we've got the Kospi, which is down 0.16%. Jess, your view on how markets have performed in the first half of the day?
Well, there's a lot to digest at the moment. We've got geopolitical tension indeed heating up. We've also got commodity prices moving on higher as well. And we've heard from a central bank today, the RBA. And then on top of all that, we've got BHP's results that are out. So plenty going on. But of course, the real catalyst will be when markets return to the US, when trade resumes, and a focus will be on services data. So traders are still, repositioning portfolios and really hedging their bets as for what is going to happen, particularly later this week with the Fed's preferred inflation gauge, PCE, out on Friday.
Now, okay, Jess, you've touched on a number of things, and let's break down a couple of those of your comments. Now, first of all, the Reserve Bank of Australia released its minutes, and basically, the RBA says that it's going to be hiking up interest rates. We've also had Australia's PMI numbers that came out below 50. What is your sense on the RBA numbers and also the RBA expectations moving forward, and how as an investor should we position ourselves?
So the fact of the matter is the RBA has increasingly been hawkish, and this is something that we're expecting at Saxo, given we're expecting higher for longer inflation. And that is because we see coal prices and LNG prices picking up. We've heard from the Australian Energy Regulator and also another organisation that's backed by the Australian government, essentially saying, hey, we still have a lack of supply in critical energy, and this effectively underpins price strength. And then second of all, something the RBA alluded to today is that wage prices are not really going anywhere besides north. And that means higher for longer inflation, and that means more hikes are ahead. So the market is now pricing in that rates will peak later this year. And so we're really waiting for more detail. So the RBA said they're waiting for the next data in front of it before they can really determine how much they're going to hike ahead. They were weighing up the idea of a 50 basis points hike, but they didn't because they're trying to make a soft landing. And essentially, it's a really tough task for the RBA because you've got the Australian Prime Minister breathing down the RBA's neck, trying not to push Australia into a hard landing. But the fact of the matter is Aussie bond yields are up, and that puts pressure on tech stocks. And so we're back to the same old rhetoric. We're still continuing to advocate that clients are overexposed or have an overweight position to commodities and also defence. And that should ideally weather the storm for higher for longer rates and also the geopolitical tension.
Now, speaking of commodities, you can't speak about Australia and commodities without talking about BHP. And you've had an exclusive briefing this morning with the CFO of BHP. Tell us about some of the key takeaways from that meeting.
So the meeting was really positive. So if we just go through some of the numbers, the bottom line is the numbers looking back and they were past looking, everything pretty much was weaker than expected. However, their outlook was indeed rosier than expected. And today, when we caught up with the Chief Financial Officer, David Lamont, I asked him, was one of the reasons that you dropped the dividend down by about 50%, was that to allocate capital towards the likely takeover of Oz Minerals so they can become an even bigger supply in copper, which is, I guess, very essential to the world's green transformation? And he said yes. So we know that the dividend, yes, it has reduced by 50%, but it's still BHP's fifth highest dividend on record. And the company does still have a very high war chest and strong cash flows that they're guiding for ahead. Essentially, they see prices and price strength underpinned by rising demand and a lack of supply in copper, iron ore, as well as other precious or other industrial metals. So that is going to underpin prices and also underpin their profitability and earnings growing in 2023 and 2024. So even though the numbers from the prior half year were softer, we're expecting good things ahead. And indeed, that was the messaging from David Lamont today. So the fact of the matter is the market is also buying into this commentary. And across Asia today, we saw prices move considerably up in iron ore, copper. Aluminium prices are also being strengthened, and so too metallurgical coal as well. And of course, met coal is something that's essential to the green transformation as well. And that is what BHP is remaining in.
Now, just that note, thank you very much for your insights. Thanks for coming on the show.
Thanks so much.
Now, we've been speaking to Jessica Amir, market strategist at Saxo Capital Markets, on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.